In today's video, I'm going to show you a real estate investment trust that analysts are marking as 100% buy. It has an 11% dividend yield, and I believe everyone needs to add this stock to your portfolio to boost it throughout the years to come. It's going to be an amazing video, so stay tuned. But first, if this is your first time watching, I show you how to make money in the stock market and have tons and tons of useful videos to watch and many more to come. So if you like that kind of stuff, subscribe to my channel and click the little bell so you don't miss anything. Alright, so let's go ahead and get into it. The real estate investment trust we're going to be talking about is New Residential Investments, ticker symbol NRZ. But some of you might be asking, what is a REIT, or real estate investment trust? So I did a quick Google search just for you and this video. Now, a real estate investment trust is a company that owns and in most cases operates income-producing real estate, such as commercial real estate, ranging from offices, apartment buildings, warehouses, hospitals, shopping centers, hotels, timberlands, apartments, to many, many more things. Now, real estate stands for Real Estate Investment Trust, like I said before, and it allows investor pools to pool their money to invest in a collection of properties or in other real estate assets. Now, REITs have a special tax status which requires them to pay 90% of their income in dividends. So that way you'll find a lot of REITs actually have some great potential for earnings. Now, as you can see here, since 2013, they have been increasing their dividends every single year. And right now, they're currently at 11% yield, which is $2 per year or 50 cents per quarter. Now, that's great on a company that's only $17.29. Now, as we get into it on the Robinhood app, 100% of analysts are saying this is a buy, and 6,500 people own this stock on Robinhood. Now, this company specifically engages with real estate investment trust and focuses on investing in actively managing investments related to residential real estate, such as different segments they operate in would be excess mortgage service rights, servicer advances, real estate securities, residential mortgage loans, consumer loans, and corporate. Now, the CEO is Michael Nierenberg. They employ only 3 employees. They're headquartered in New York and were founded in 2011. Now, they do pay a dividend yield of 11%, which is extremely high, guys, and that is amazing because they still have an 11% growth for the year and 152% growth in 5 years while still being able to pay a consistent dividend. Now, their PE ratio is also very low at a 4.5, which is great. I love low PE ratios. For all of the subscribers out there, I always talk about low PE ratios. They have a $6 billion market cap, so they have a lot of money to work with, and 3 million is their average volume per day. Now, there's tons of news on NRZ. You can do a ton more research, but I'm just basically going over the basics in this video. It's 1% lower right now to buy due to some stuff going on with the stock market correcting and everything like that, but which is not bad. They had a 52-week high of $18.75 and a 52-week low of $15.24. Now, 100% of 8 ratings from analysts are saying it is a buy. No one is saying it's a hold or a sell. I love companies that have a great earnings per share. It looks like these guys are right around 70 cents per share with an expected earnings report coming up not until February 13th. So that is great, guys. 70 cents per share is awesome. As you can see here, I bought a share for $18. And then about a month later, I sold it for $17.48. Now, you would say I lost 52 cents, but actually I got a dividend October 25th and only lost 2 pennies on that trade. And I just really wanted to sell it and get out of it. It wasn't anything personal or anything related. You know, I was like, 2 cents, whatever, sell it. I got the dividend, good enough. So this company is a really strong company to get involved with. I mean, 11% dividend yield is amazing. And other than that, guys, I mean, it's really not that bad of a company. Now, there are other REITs here. As you can see, you could click that. But as far as the new residential investments, I believe it's a great company to get involved with. It's got steady dividend yield. I mean, even if you picked up 100 shares of this company, you'd be looking at around, I want to say that's around $50 every quarter off of that. So it's pretty cool, guys. You guys definitely take a look at this company. They have a lot of potential to grow, and it is 100% buy rating. All right, guys. Hope you enjoyed this quick little short video. You guys have a great day.